Welcome back to Talkpoint. Today we are looking at Wall Street, where the stock market is swinging sharply as investors react to new inflation data signals from the Federal Reserve and the latest tech earnings. With so much uncertainty, many are asking, are we heading towards stability or could more turbulence lie ahead? The markets have been anything but calm. The Dow, S&P 500 and Nasdaq have seen dramatic ups and downs this week. One day stocks rally, the next day fall sharply. The driving forces, fresh inflation numbers showing prices are cooling but not as quickly as hoped. Federal Reserve signals hinting that interest rates may stay higher for longer. And mixed corporate earnings reports, especially from the tech sector, where some companies beat expectations while others fell short. For everyday investors, this volatility is unsettling, and for policymakers, it's a sign of just how fragile the economic outlook remains. At the heart of the Wall Street's roller coaster riding inflation. The latest consumer price index shows that inflation is still above the Fed's 2% target. While it's down from the record highs of 2022, prices for essentials like housing, food, and healthcare remain stubbornly high. The Federal Reserve is now sending mixed signals. Some officials say rate cuts could come later this year in inflation continues to ease. Others warn that moving too quickly could spark another surge in prices. This uncertainty leaves investors trying to read between this line. Will borrowing costs stay elevated for months, or is relief finally on the horizon? For business and consumers alike, the answer will shape everything from mortgage rates to bring hiring decisions. Adding fuel to the fire are earnings report for America's biggest tech giants. Companies like Apple, Microsoft, Google, and Tesla are under intensive scrutiny because they have helped drive much of the market's growth in recent years. Strong results from some firms boosted investors' confidence early in the week, but disappointing numbers from others quickly wiped on those gains, underscoring how dependent the market has become on the tech power sector. Investors are also watching how these companies are handling the rise of artificial intelligence, supply chain pressures, and global competitions. For Wall Street, tech earnings are not just about profits, they are seen as a barometer of the broader economy. For ordinary Americans, these Wall Street swings are not just numbers on a screen. They affect retirement accounts, 41k and pensions rise and fall with the market. Home buyers, mortgage rates remain high, pricing some families out of the housing market. Workers, companies facing uncertainty may have hiring or announce layoffs, particularly in the tech sector. This volatility creates a sense of unease. Even though the US economy is still growing, many households feel squeezed by higher prices and borrowing costs, while also worrying about the stability of their savings. So, what comes next? Analysts say the markets will likely remain choppy until there's more clarity on inflation and the Fed's next moves. If prices growth slows steadily, interest rates could be cut later this year, providing later relief to borrowers and a boost to stocks. But if inflation remains sticky, or if global tensions disrupt supply chains again, volatility could stay well into 2026. Investors are bracing for the possibility that the unpredictable cycle might not end soon. Wall Street wild ride is a reminder that the USA economy is still in a delicate balancing act, caught between cooling inflation, uncertain Fed policy, and the future of the tech sector. For now, both investors and everyday Americans will be watching closely, because what happens on Wall Street has real consequences on Main Street. Thanks for turning into Talkpoint. Don't forget to like, share, and subscribe for more breakdowns of the biggest financial and political stories shaping our nation.